Hi everyone, hope you're all doing well. Welcome into the most popular video series that I do on the YouTube channel, which is the 8 stocks I'm buying November 2025 edition. Now, I hope you all had a good weekend. For you guys that celebrate Halloween, this was actually my display in the front garden this year, and went a bit over the top. I've already got the warning from the missus saying I am not allowed to buy any more Halloween things for the front garden next year. We'll see what happens there. But if you do celebrate it, hope you had a good weekend. And as well as that, I made a video the other day about Fizzer, and I got probably the best comment I've ever had on a YouTube video. I laughed out loud for quite a while about it. I normally get a few things said in the comment section about me in the videos, and I don't know what it is when I talk about a stock that I don't own but just give my opinion on it. If it's quite like a negative view, which that one was, I'm not really a fan of the stock when I had a look at it. But clearly someone that is a shareholder didn't agree with me, and he decided to call me a peon. I can say I've been called many names on this YouTube channel over the years, but a peon is, I don't even know what that is, but that was the first time I've been called that, and it did give me a good laugh. Anyway, let's get on to the video. So today I'm going to do the 8 stocks I've been buying November 2025 edition. So I'll go through all the stocks that I sold and all the stocks I have bought between the 1st of October to the 1st of November. Everything I'm buying is a long-term hold, so I'm aiming for 2 to 5 years, and sometimes they do perform better than that before that time frame, which obviously is amazing when that does happen. But normally I'm buying for like the next 2 to 5 years, and that's when the things I'm buying for normally end up playing out, and then that shows on the share price. I aim for about 100% return when I'm buying these stocks, and like I said, anything that I've bought is on this video series. Anything I sold is on this video series, so you can go back 3 years, 5 years, 7 years, coming up to I think nearly 9 years now, and you can track along with everything that I've done in the stock market. And I think that's what makes it such a popular video series, that you can kind of follow along with my investing journey. So apart from that, let's get started on today's video. Now, just a quick shout out, if you do want to know what I'm buying and selling in real time rather than monthly updates, join the Patreon. I post my live buy and sells on there. As well as that, I do 2 exclusive videos a week, although this week I think we're on 4 exclusive videos on the Patreon, and I think by the time Sunday is over, I should be on 6 exclusive videos on the Patreon for the members on there. You get a Discord with 600 members to talk about stocks, including me, and it's £6 a month. You can pay yearly, which works out as like £5.20 or something a month, but just to let you know, the Patreon price is going up in January. At the start of next year, the price is going up to reflect the content on there and the performance of the stock market portfolio. We are up over 50% year to date, so it is going to be reflected in the Patreon fees for you guys. So if you do want to join, now is the time to get in before the prices do go up. And if you do want to join eToro and follow me on there, I am currently a popular investor on eToro. The link is in the description as well. But let's get on to the stocks I've been buying and selling through November 2025. Now we're going to start with the sales as always, and yeah, it was an unbelievable month. I think I said on the last video that it was probably the best month for me as an investor. I think that this month has just gone and beat it again. It was an incredible month. There was a lot of profit locked in. There was a lot of stocks have been rolling up, and we did take advantage of that, and we locked in some money. We're here to make money in the stock market, so that's what we're going to do. So starting off with the first little sell that I did have is Google. I did trim my Google position. Just going to clarify that one more time. So I trimmed the position, not sold it completely. So I did trim the position twice, once for an 81% return and the other one for 107% return. So Google did enter the 100% return club. I've been buying Google for a little bit. I said to you guys about the start of the year saying, look, I think Google could come my largest position if it stays at this $155 range. But from then it has had a pretty significant rally, as you can see here. And yeah, Google was an absolute gift at the start of the year. I think it was like 17 forward times earnings for what, in my opinion, is the best company on the stock market. I am going to take that opportunity all day. So I was buying at these sort of levels. Since then, the stock has rallied significantly. So I have decided to lock in some profit because I do think the upside is a little bit more limited at $281. It does show you the stock market though sometimes that nobody wanted to buy it at $155. People were selling at $155, and now the majority of people are willing to buy it at $281. It's amazing what momentum does in the stock market. So yeah, I did decide to lock in some profits from the buying the dip up in April time, and I think previously as well, I was buying a bit previously when we had a bit of a dip in September time as well. So yeah, did trim some profits on Google, so well done to any of you guys that were buying that one at the start of the year. The next one, Hims and Hers. So Hims and Hers out of nowhere had a bounce in the mid-October time to about $62. A pretty significant rally from where it was around summertime. Ended up going about 30% upwards, and I just look at that levels, and when Hims and Hers gets into the $60 range, for me that's more than fairly priced. So I did decide to trim my position on Hims and Hers, and that has worked out very well, because since then the stock has fallen significantly. I did trim my position and I locked in a 504% return, and that's been a really significant performer for us. Next one, PayPal. So this was actually the week that has just gone. PayPal had a significant jump in pre-market. It was it's actually, you can't see it here, it just shows about a 9% jump here, but actually PayPal before the market opened, it was up around about 18%. So with the stock jumping 18%, I was like, maybe that's not natural, it's going to give some gains away. I think that there's a lot of people desperate to get out of PayPal at the moment, so I thought, you know what, I'm just going to take in a little bit of profit here, and I did trim the position and locked in an 18% gain, which has worked out phenomenally, because since then, once again, the stock has given it all back. So glad I took a bit of profit on that unnatural jump in PayPal. The next stock I trimmed was SoFi. Once again, this is a stock that we have been buying around that 2022, 2023 timeline. Stock was performing amazing, financially executing to perfection, and yet the share price just went stagnant for like a good year and a half. Now the stock has woken up. The stock has surged up massively, as you can see here, and with the rally that's been on this year, 172% in the last year, been a great performer for us. And I just thought, you know what, I'm going to lock in a bit of profit. I think the company's trading at like 100 forward times earnings or something like that, and I love SoFi. I think it's going to be a mega company in the next 5-10 years, but sometimes when the valuation just gets a little bit rich, it's like maybe we do a little bit of a stagnation here, a bit of a pullback to let that financials catch up a little bit. So did decide to just take a bit of profit on SoFi. And the last one was AMD. So I originally said I'm not going to lock in any profit in AMD until 2026, and that's when some of their key catalysts start coming in, like their big deal that they've just signed with OpenAI. But I just looked at the last month, and the stock had rallied significantly, and then it just went ballistic through the month of October, and with a 112% year-to-date return. But really since April time, you know, can you believe people were selling AMD at $7 to $8 this year, only a few months ago, and now people are willing to pay $256 for it? Yeah, absolutely crazy. But yeah, the stock's rallied up about 227% since that time frame. And I just looked at the valuation, and I looked at the hype around it, and is people just getting a little bit carried away now? And I thought, you know what, I am just going to lock a bit of profit on this stock here right now. So I did just trim the position slightly in AMD, and I locked in a 70% gain and a 91% gain as well. So being a fantastic performer for us, and a fantastic month. You can tell here there's been a lot of profit locked in into the portfolio. That takes us on to the stocks that I have been buying. So number one, I'm going to start with probably my favorite stock on this list, and just going to make you aware that I sometimes throw the titles out, like the big titles of like, this is like my number one stock to buy, and this is my number one stock for 2025 or whatever. Adobe could be my number one stock for 2026. They've got one more financial update, which I think is due in December. And if they do another really good update in December, I am going to put Adobe down as my number one stock for 2026. And I think Adobe is getting quite high up on the list of my largest holdings. I would see Adobe break into my top 3 holdings. And then, like I said, if it stays here and they keep financially crushing it how they have been doing, I could put Adobe to my number one holding in 2026, depending on the next couple of updates. But yeah, I really like Adobe at the moment. What I'm seeing with Adobe is just very similar to what I saw with Google last year. So Google last year, people were saying Google's finished. AI has disrupted Google and nobody wanted to own it. And it was just a load of rubbish. It was just overblown fear. And then eventually everyone realized, actually, Gemini's going to do really well for them. They've got all these other things going on really well for them. And now everyone's willing to buy back into Google. Adobe for me is going through the exact same cycle where people are saying, oh, Adobe's finished, nobody wants to own Adobe. And you look at what they're doing here, and the company's still doing very well and will continue to do well for the next few years. It's not like AI is going to kill Adobe's business overnight. But if you look at the AI products that Adobe are bringing out, they seem to be doing really well. And it just seems so overblown, these fears around Adobe at the moment. It seems like you're either going to have people going to use either Adobe or AI. And I still think the case with Adobe is that people are going to use Adobe, but they're going to use Adobe with AI. It's not an Adobe killer. They work together. And I think that people are being very slow to realize that. And then eventually when they realize that, they'll come flying back in and be willing to buy the stock when it surges up at $500, $600 again. Now, I also think an issue with Adobe is that what happened is the PE ratio went extremely high. So you can see here in 2023 and even in 2024, Adobe was trading at 50 times earnings, which in my opinion, 50 times earnings for Adobe is overvalued. And that's my opinion why Adobe has had a pretty significant pullback since 2024. But I think because of all this fear and all this AI and the stock being on the downtrend has now pushed Adobe way too low than where it should be. And that quite often can be my favorite time to buy a stock, is when there's been a bit of fear out there and the fear should have maybe only took the stock down 10-20%. But now the stock has taken it to incredibly undervalued levels for a great business, and I believe that Adobe is a great business. You look at now, and Adobe is currently trading at a forward PE of 2026 in 2026, which is like 12 months away. It's trading at 14 forward times earnings. That should not happen on a company like Adobe. It should not be happening. It's incredible. So you'll be talking about Adobe. The minimum Adobe should be really is 20 times earnings. So in 12 months time, Adobe is going to be significantly under the average valuation of the S&P 500, and this is above average company compared to the S&P 500. You'd even make the case that Adobe, in my opinion, should be trading at 25 to 30 times earnings, which is incredible to see. And they own some of the best brands that are out there, you know, the likes of Adobe Photoshop, one of the best editing softwares out there. You look at the AI, people saying, oh, they're getting disrupted by AI, but if you listen to Adobe Firefly is growing rapidly. It's growing ahead of their own expectations in their recent earnings. And you look at the recent earnings, what disruption from AI? You know, they're coming in with EPS beats, good amounts. You've got revenue growth, still growing at 10% a year. You're having them hike up the guidance, and they're saying, look, the reason why we're hiking up our guidance is because AI has been an even bigger benefit to us than what we thought it was going to be. Not a market share loss to them, which is just incredible. And you look at the company, very good track record, great profit margins, great balance sheet on this business here. Look at the balance sheet on here. And because of that, they're able to buy back shares. I mean, look at the shares they've been buying back in the last few years. Adobe, in my opinion, I said to you that, you know, earlier on in the video that Google is, in my opinion, the best company in the stock market, in my opinion. But Adobe, I would say Adobe certainly reaches my top 10 businesses in the stock market, maybe top 15. And once again, when you get one of these stocks on sale like that, it's one of the gifts that you can't stare at too long, because eventually people will realize and they'll start buying it up. And I'm a big fan of Adobe, so we'll see what happens there. Moving to number two. So number two is PayPal. So I'm a big fan of PayPal. I used to own the stock, sold it out, made good money back in last year. And then I couldn't believe it. The stock continued to fall and it fell back into the $60 range. So the last kind of couple of months, I've been buying back up a stake in PayPal. The stock has stayed very stagnant at the moment, and I think that's very unfair, because actually the company has actually been doing really well. Now, what happened with PayPal is they took the market position they had for advantage. They basically was one of the first movers into the online payment space, and then basically the attitude from the old management is, we've got all these customers, what we're going to do is we're just going to fleece them and make more money off them. And as that happens, basically people get fed up with PayPal and then they look for alternatives. And they've lost a lot of market share They've not moved into new markets quick enough, and that's really cost PayPal over the last few years. And that's been reflected on the share price. If you look at the share price, really, they've fallen back massively since that time frame. So what they did is they brought in Alex Chris. They brought Alex Chris in from Intuit about 2 years ago and saying, look, you've got to revamp the company. And what Alex Chris has done is he's gone, yeah, okay, watch this. And the latest earnings have showed that massively. They did an investor day about a year ago now, and what they said they were going to do has been executed, and you can see that in the latest financials. They said they were going to win checkout. You look at branded experiences, total payment volume, gaining major acceleration, as you can see here. They said they were going to improve their omnichannel and grow Venmo. Omnichannel has been growing really well. Venmo, debit cards growing 40% year over year, which has been good. Pay from Venmo, total payment volume as well, 40%. Buy now, pay later as well, growing 20%. These are the key drivers that they said they were going to do, and that's been shown in the latest financials, which has been great. They also put a few other details out here about their win checkout. If you do want to check that out, it's in the, no pun intended, that is in the investor presentation. You can see once again the growth drivers accelerating from where they were at to where they're at now, from 10% year over year to 20% year over year. They've also got other areas that they're looking to go into. So Agentic, which is the AI payment platforms. We've seen that sign a major deal with OpenAI, and also the expansion into ads and also crypto, which is a growing space for them at the moment. And that's clear when you look at the latest financials. The latest financials were really good, accelerating. Revenue growth at 7%. You had non-GAAP EPS growing even faster at 12%. These are really good figures, all while the company sits on next year's forward PE of 11 times earnings. A company doing these numbers should at least be 20 times earnings. We could argue the case that maybe even more than that. And what PayPal said they were going to do, or what Alex Chris said he would do when he comes into PayPal, is clear that it's starting to show up in the financials. And while this company continues to grow profit, continues to grow the revenue, look at the share price. It has stayed stagnant for so many years now. It's incredible. And eventually people are going to realize that actually what Alex Chris has got going on here at PayPal is looking pretty attractive. As well as that, buying back shares massively, which I really like to see from a business. So I am a big fan of PayPal. Next one, number 3, Monday.com. So Monday is a relatively new position into my portfolio. I started buying this a couple of weeks ago. If you ever watched my video with H Invest, which by the way, I think I am going to have another chat with Henry at some point in the coming weeks as well. So there should be another video coming your way at some point. So keep your eyes open for that. But he actually pointed this one out to me and he said, this is really good. And I'm a guy that doesn't normally buy pure growth plays like Monday.com. But I actually really like this one, and I looked at it and I thought, you know what, I can see the potential here for Monday.com when they mature as a business to do very well. And it's on a significant dip at the moment, and I actually don't know why it's on a significant dip, because they've actually been doing really well. The latest earnings were great. They came in with a really nice beat. You can see here a nearly 20% beat on the EPS. Revenue growing at 26% year over year, which is great. And they also hiked up their full year guide. Now, they did an investor day a couple of weeks ago, which if you've not seen the investor day, go watch it, because it had so much good information on there, more than what I can tell you guys in this kind of 3 or 4 minute segment here. But go give it a little bit of a listen, because it was fantastic. So what they're doing is they're creating a lot of new products. Basically, what Monday.com previously has been is a cloud-based platform that allows project management software inside businesses. So you've got a lot of people working for you, who's on what project, where are they at. That is all solved with Monday.com. But what they have also done now is they have launched other new products. And you can see here, Monday Service, which is one of their newest products, is currently Monday's fastest growing product at the moment. And they have had this kind of one main platform, and they've launched all these newer platforms, which is going to increase the TAM. You can see here like work management, CRM, development, service. And what they're going to do is currently 6% of accounts only have 2 products or more. So they have identified that they can expand their TAMs and also cross-sell their platforms into current clients. And they think that this could get to the potential of 40%, which obviously would be fantastic if they're able to do that. They have also announced a share buyback, which is a 870 million share buyback, which obviously is a significant amount. They are gap profitable. They do significant amounts of free cash flow, so you can't really value this off earnings because a lot of the earnings go into the reinvestment of the more products for the business. But free cash flow, significant amounts. You can see here, 2026, 405 million of free cash flow expected, which is obviously a significant amount. They do have really good gross margins. I don't know if I can quickly find it on Simple Wall Street for you guys. By the way, if you do want to join Simple Wall Street, guys, there's a link in the description. It gives you 40% off Simple Wall Street if you do join. Yeah, 89% gross margins. So you imagine what levels of profitability these guys could do if they wanted to pull the profitability trigger. It would be significant. Cracking balance sheet, you can see here. There's no debt on there. They sit on 1.6 billion of cash. So they've got a good 15% of the market cap in cash at the moment. They're a founder-led business as well, which is also something that I like to see. And the founders still own a pretty decent stake in the business, 9% stake and a 3% stake as well, which is great. So it's best in their best interest as well for Monday.com to do really well. If you look at a price to free cash flow ratio, because I think you've got to value this off free cash flow at the moment with the stage that the company is in. Currently 33 times free cash flow, and if you look at next year's numbers on a free cash flow, so if we assume they're going to do 405 million, that puts you about 25 times price to free cash flow. And if you do look at what Monday.com is normally trading at, they normally trade about 40 to 50 times free cash flow. So Monday.com is going to be about next year half the price to free cash flow than what it normally trades at. And if you look at some other players in the space, so someone like a HubSpot, for example, HubSpot currently trade at about 50 times free cash flow, and HubSpot is nowhere near the quality of a business as Monday.com, nowhere near the growth of Monday.com, and clearly doesn't have the future like a Monday.com. And yet, Monday.com is going to probably fall to about half the valuation of that. So, yeah, it's a really good opportunity for a growth stock to be on sale. You don't often get these growth stocks on such a significant pullback, but Monday.com seems to be having that at the moment, and I have decided to add into that position. Moving on to stock number 4, which is Shift4 Payments. Now, I am a bit nervous talking about Shift4 Payments because they are about to report earnings this week, and as we know, when they report earnings, some of the things that you use can very quickly come out of date, so just be prepared for that situation. But yeah, I am buying Shift4 Payments. It's had a pretty poor year. You can see here, really, since February time, the stock's lost over 40% of its market cap. And same again, not exactly sure why, because they're actually doing really well. I don't know if it's just concerns that they've been making some big acquisitions and that's what the market doesn't like. But I actually think the acquisitions have been really good targets. They've paid good prices for them and will really help the company grow. So if the market is seeming to overreact to these, maybe it's an opportunity to maybe buy the stock on the dip. So what do? So they are a point of sale product. So for example, if you go in restaurants, hospitalities and sports and entertainment, they are more in the hospitality and sports and entertainment space. They do, for example, if you went to the till, you might see a Shift4 payment system like this one here. And what that gives them the ability to do is not just the checkout tool, but also this point of sale system links other areas into the whole system. So for example, you could have like tableside ordering, you could have the example for the payment side of it, kitchen efficiencies. So you get from the traditional method of everything being separate all into this one point of sale system, which is easier for the businesses to manage everything in this one platform and gets all the data in from all these areas. So for example, one of the products they have is this Sky tab. So traditionally, what you would have to do at a sports venue is you'd have to have different systems for maybe your point of sale in the gateway, your ticketing side of it, the concessions, what you would maybe do as a loyalty point system. You'd have to get all these separate businesses to manage it all. With SkyTab, it all comes into that one platform, and what happens is Shift4 manage it for you. They're a company that has historically done very well. If you look at the 2021 guidance and what they actually achieved, they were ahead of expectations, with very good growth as well, by the way. And they also, you can see the expansion here between the hospitality, restaurants, and unified commerce as well. They have expanded internationally very quickly, and that's given them a lot of edge with the first mover advantage. And the long-term guidance now for Shift4 Payments, you can see here on their sit on the hands, this is if they underperform, a 3-year CAGR of high teens. Same on the adjusted EBITDA guidance. The most likely case, and hopefully the case that is the ambition to a hit, is a 3-year CAGR of 30% revenue growth, an adjusted EBITDA CAGR of 30%. So if I showed you those numbers now and you're thinking, what would you value this company at? What would you value a company that's just come to you and said, we're going to grow revenue at 30% CAGR over the next 3 years and adjusted EBITDA at 30% over the next few years? What would you value that company at? So have a little think. If I were in that position, I'd be thinking, okay, I think you're going to have to pay somewhere between 40 times earnings, 50 times earnings for a company like that. So do you know what Shift4 Payments is currently trading at? It's trading at a forward P of 10. I'm not kidding you. 10 forward times earnings. Yeah, it's I have not seen a disconnect like that before. You know, in a year where they're expecting revenue to go from 4.2 billion to 5.3 billion, they're expecting net profit to go to 510 million to 638 million. 10 times forward earnings. I am as shocked as you guys. So, yeah, not sure what's going on there. Granted, the balance sheet could be slightly better from some of these acquisitions that they're making. They do have a little bit of a debt, big bit of a debt position, but they do have some nice levels of profitability, as well as that the chairman of the board as well is what I always like to see, has also bought a decent position. Well, I say decent, $60 million worth of shares inside the business, which is obviously a pretty good sign. And that's also while already holding 3.2% of the business, which is obviously great to see from there. So yeah, big fan of Shift4 Payments. I don't want to say too much because, like I said, they're reporting earnings this week, but yeah, that looks pretty attractive. Moving on to the next one, Shark Ninja. So Shark Ninja at the moment, it had a bit of a drop towards the back end of the week, actually, to be fair, Shark Ninja. But I'm sure you're aware of this one there. This doesn't need too much of an introduction. You probably have some of the products inside your house. So Shark, they obviously are mostly known for their Hoovers. In fact, I need a new Hoover, actually, so I might go get a Shark, but also the Shark brand does other things like fans. They have expanded into the beauty range as well, which is a great area to expand into, and also Ninja. So Ninja obviously mostly known for the air fryers, although they did a slushy maker which went pretty viral this year. And I think what was the concern around Ninja is that obviously air fryers had a big hype a few years ago that has overlapped, and Ninja and Shark have all still continued to perform even after that trend, and continued very well financially. And they keep launching into new products and they seem to do very well. These is a high-end product as well. So very good profit margins. You look at interest rates are going down, and that means the housing market might pop up. When that happens, you know, when do you normally go buy brand new Hoovers, brand new ovens, or fryers or air fryers? It's when you get a new house. So that's going to be a really big benefit for them. Same again though, I want to be really careful is that these guys are reporting earnings this week, so I don't want to say too much, but yeah, so they've launched a lot of new categories, which is great. Like I said, the frozen drink makers have been a very successful area for them. I think the makeup area or the beauty area can be a really good growth driver for them, though, going forward. They've been a bit slow on the international side of it, so mostly being in the Canada, United States and the UK, but they have now started to expand internationally. So I think new areas that they're launched into this year are the likes of Latin America, the likes of Poland, the likes of Norway. So still plenty of international growth for them to expand into, as well as these new categories going forward. The recent earnings looks really good to me. They hiked up the guidance, nice beat on the EPS revenue, a 16% growth, which is obviously really good to see. And the company currently trading at around about 14 forward times earnings, which is yeah, quite surprising for these levels of growth figures. I think the growth will slow down in the next few years from like the 16% that we are seeing. But even if we slow down to like a 10% rate, yeah, it's still very good growth for this sort of valuation. So yeah, I like Shark Ninja, and I won't say too much because, like I said, they are reporting earnings this week. So the next one, VF Corp. Now, VF Corp have actually just reported their earnings, which is a bit of a different theme to the last few stocks that I've mentioned, which is good because we have loads of updated information. They actually reported earnings, and the stock ran up into earnings, and it actually went up on earnings, and then it sold it off, which was incredible. So Bracken Darrell, so he's the new CEO of VF. Well, I say new CFO. He's been there actually for like a year or two now, and in my opinion, the turnaround has started to show from his leadership, which is great. He was brought in to turn around the business around. He has a track record of turning businesses around. He did the same thing with Logitech, and that stock ended up being like a 10x stock, and some other brands as well. And the latest earnings for me showed once again a turnaround in VF Corp's business. They beat on EPS, the revenue went back up into growth mode, which was great. And if you were to stare at the trend since he came in and is trying to turn the business around, if you look at the revenue growth, it's massively going up in the right direction, which is great to see. If you look at the brands, North Face still performing very well. Timberland doing really well. Other brands as well doing great with a key growth driver in there of Altria. And Vans has always been the sticking point for them that they need to really turn around. They've done that through getting rid of stock that hasn't been selling. They've got rid of a few stores that haven't been performing amazing. And they're starting to get that closer to going into the right direction. That trend has been going up nicely at the moment. Wholesale is still growing at a good rate. Direct to consumer is now only down 1%. America has improved massively. Europe has been growing well at the moment as well. And one issue they had is to really get the debt paid down. And that has started to happen. They just sold off another brand of theirs, which is Dickies. And that's really going to get the debt down because they've got big payments on that debt. And that's going to really help the profitability if they're able to turn that around. And as we see here, the trend hopefully is going to start going up in the right direction. We start seeing growth come back and they do good levels of profitability. Now, this company previously was a company that used to do a good 10% profit margins. So if they're able to get to a level now where at the moment, let's say 9.4 billion market cap revenue, and you do 10% profit margins, let's say 900 million in profit. If you do 900 million in profit on a 5.7 billion market cap, looks pretty attractive here. And like I said, they are also trying to strengthen all that balance sheet as well, which is good to see. Now, as I always say to you guys, the one thing I always look at in turnarounds is that the management team have the same risk to reward as its shareholders. Like, I want to see them invest in the company as confidence of like they've got skin in the game. They see the turnaround. They're willing to put the money into it. And you look, for example, at Bracken Darrell. He just put $1 million into the business in May time as well as the COO and also the chairman of the board, which is a really positive sign. That's about a year's of his salary put into the business. So that gives me a lot of confidence as well about this turnaround play. So yeah, when I looked at VF Corp, I was really surprised to see the stock give a lot of these gains back because like I said to you in the video, just earlier on in the video, for me, what he said he was going to do is he was going to get the debt paid down, which he has done. He's going to get North Face and Timberland to still perform well. He's going to get Vans going up in the right direction, which seems to be happening. The trend is going in the right direction as well. We've just seen the first growth period that wasn't in the Christmas period, which is great to see. And yeah, I think the turnaround is certainly happening here. So I'm a fan of VF Corp. Next one, Mercado Libre. So Mercado Libre is the stock that I always say to you guys, in my opinion, quite often people ask me like, oh, what should my top 5 holdings be? And it's always a tricky one because different opportunities come up at different times. But with Mercado Libre, there's always seeming to be an opportunity once a year in Mercado Libre. And I say to you guys, the time to buy Mercado Libre is when there's a 20% drop in the share price. Do you know what happened in this last month? You got your 20% drop. So you can see here, Mercado Libre, well, it's coming up 19%. It was actually 20% if we get the exact high to low. It had its 20% drop. So from September to October, it had it. And the stock fell to about $2,000. those are the times you need to buy this one if you want to buy it. Those 20% drops. Now, since then, the stock has rallied significantly. Once again, I guess that's the benefits of having the Patreon, knowing what I'm buying and selling in real time. But yeah, I took that opportunity to buy Mercado Libre. I always say, like, Mercado Libre, people ask me all the time, and it's hard to say, like, what should be your top 5 holdings, because it depends what opportunities are in the market at the time. But there's always at least one point in the year where you're able to get Mercado Libre on a 20% dip. Last time we had a 20% dip was probably around about April time. And if you can, those are the times to buy it. And for me, Mercado Libre is a stock that should be a top 5 holding in everyone's stock market portfolio, because the next 5 years, 10 years, Mercado Libre is going to be a monster, and you need to own that, in my opinion. And that's personally what I have as well. I have Mercado Libre as a top 5 position. Now, if you don't want Mercado Libre do, they're basically the Amazon of Latin America, and they've also got a payment company on the side of it as well. So what they did is they were able to open up the e-commerce quicker than what Amazon could in Latin America, and they took the market share. They opened up the delivery network quicker than what Amazon could do. So they're able to do like fast delivery before Amazon could even get set up. And as well as that, there was a lack of payment system. So they also opened up a payment system, which also does really well for them. And this, for example, is the Mercado Libre e-commerce website. Look at this. This is pretty cool, isn't it? This little light with this fan on top. I might get myself one of them. So the latest financials came out this week, and yeah, really good. GMV up 28%, items sold up 39%, as you can see here. Credit portfolio was up 83% at the moment. All very attractive numbers. And if you look here, unique active buyers, that accelerated, which is always a word that you want to see when you're looking at a company's earnings. You can see here the same day and next day shipments, that grew 28%. So this is the thing, is that if people are coming to the platform and they're getting better service more and more, it's just going to make the platform more and more sticky. That's why Amazon's never going to get disrupted now because of that. And nobody's going to, even if Amazon wanted to launch in Latin America, it couldn't now, because, Mercado Libre just built up such a network, as you can see here. If you look here, items sold per unique users, that increased to 8.3. So people are, buying more and more items from the platform because they like it so much, which is just, a great cycle to be in. And right now, it's 36 forward times earnings, and that is after the jump that it's been on. So like we said, it has had a bit of a bounce back by about 14%. So in mid-October, you're able to buy Mercado Libre at like 33 forward times earnings, which for a company that has the growth rates and the clear TAM growth in the next 5-10 years this one has, that shouldn't be happening. You talk about Mercado Libre, in my opinion, this is it should be a 60 times earnings business, because it's such a good company, such a good moat. So it was an absolute gift. So I did buy some Mercado Libre. And that takes me on to the last stock on the list, which is gambling.com, number 8. So I did buy some gambling.com. This has had a tough year. I mean, look at the pullback on this stock here. Pretty significant. And I actually think they've been doing okay. Like, the EPS was a nice beat in the last quarter. Revenue growing at 29% year over year as well, which was great to see. Currently trading at a forward P of 6 times 2026 numbers. Gambling.com, what they do is they're a player acquisition service for online casinos. So if you imagine DraftKings, Bet365, William Hill, how do you get players to come on your platform? Well, we need to acquire them. So they go to someone like a gambling.com. Gambling.com offer websites, and those websites might say, hey, do you want to join a certain betting platform? This is currently the offer they have. If you sign up, you get $10 in free bets. Or if you join this platform, this is the platform that has the best odds on that bet that you want to do at the moment. So they basically get the customers, and then they send them across to these betting platforms. So they don't actually run a betting platform, even though you probably think so with the name gambling.com. They acquire these customers for them. And what you have at the moment is you have a Latin American market that's growing quite well, Europe growing quite well, but North America, obviously, as more and more states start coming online, all those players that suddenly are allowed to start doing those sports betting, they need somewhere to go. So they're seeing a big surge in the North America revenue, and you can see here, this is the big growth at the moment of the North America area. At the moment, the global online gambling is expected to grow at about a 12% rate. US is a major growth driver, and that's expected to grow at 28%. So they've got good growth drivers in areas outside the US, but the US is going to be a great growth driver for them. And like I said, as more and more states come online through sports betting, if more and more states come online through iGaming, there is going to be a big surge in that US growth rate where, gambling.com will do really well. As well as that, the company itself is diversifying its revenue streams. At the moment, they did do a recent acquisition that will expand their current offerings. They've got a couple of offerings where they do the acquisition. They also do some where they do a newsletter service, which is like a SaaS model, and they send out the weekly best odds that are being offered on the market. And then also they're doing some packages where if you go to Las Vegas, they compare the best packages about where you can stay in a hotel room, and then you get a certain amount of chips that you can use in certain locations in casinos there, and that's another expansion for them. So they're also diversifying as well, which is great to see at the moment. So they do report earnings in 2 weeks' time, so I don't want to say too much then until we get that little bit of an update for them. But yeah, it looks, for the valuation numbers they're putting in, looks pretty good at the moment. So I did add some gambling.com in. So yeah, that is it. Those are the stocks that I sold, and those are the stocks that I bought. I will do my UK one probably next week for you guys. So keep your eyes open for that. And once again, what a long video. We are pushing over 40 minutes. So if you did make it to the end, thank you so much. If you could subscribe, that would be amazing. If you could like the video, that would be amazing. Getting quite close to 20,000 subscribers. And I always say this when we do the long ones. I'm always interested to see how many people actually make it to the end of the videos and listen to me rattle on for like 40 minutes. I always think there's not many people that do it, but last time I was quite surprised the amount of people that said they did do it, because I said, if you didn't make it to the end, put jam donuts, I think, in the comment section. And loads of you guys did it, actually, to be fair. So this time round, I'm going to say, if you made it to the end of the video, put in the comment section hot dogs. That'll be an interesting one to see how many of you guys made it to the end of the video. So if you did, stick hot dogs down, and that always impresses me how many people did make it to the end. But apart from that, have a lovely rest of your Sunday, guys, and I'll see you probably tomorrow where I do a week ahead preview for the stock market. See you in a bit.